So let's hit the Frontier opening bell for the Thursday, the 3rd of September. Welcome, um, Ali Kansachu, Rich Frontiers Management CEO and founder. Thank you so much, Ali.
It's a pleasure to be with you, boss, and thank you for
Great to be with you again. Also, Luke Ofojebe, who is the senior and team lead in terms of equity analyst at Vertivo Capital Management. Good morning.
Good morning, Boasim. Thank you
Look,
for having me.
great to see you. Thank you, gentlemen. We appreciate your time. Let's look at the African equities market close. 5 of them we track on a daily basis. Egypt market was down 0.2%. President Trump is hitting Ethiopia over the Renaissance Dam. It's a big story there. Says going to withdraw $310 million aid to Ethiopia. The Nile Dam crisis is continuing, it's not over yet. Ivory Coast, the BRVM was sharply lower, 1.27% on Wednesday, and the Nigerian stock market 0.53%. The big banks are reporting their numbers. Luke, we'll take a quick look at 2 or 3 of these for us. Quickly, what does it mean moving forward for the rest of the big banks yet to report, and what that could mean for their equity prices on the Nigerian bourse? Kenyan market 0.53%. A good story there, and a big inquiry being opened into fraud related or theft related to COVID-19 money. The similar story in South Africa, $30 billion rounded. South Africa's Attorney General says this money is open to fraud as well. The GLC yesterday softened 0.12%. Let's talk about the East African markets. Let's take a quick rundown of the top stories within the East African region. President Trump is canceling $130 million aid to Ethiopia. That's big story. Kenya opens big inquiry into COVID-19 theft cases. Mauritius revoked Islamic lenders' banking license. Century Banking Corporation's Old Mutual in Uganda, or Old Mutual reporting 305 million Kenya shillings net loss. And the Bank of Kigali's net income up 10.6% Rwandan franc year on year. Ali, good morning. Should we start with the dam, or
Yes.
how do you want to go?
So
Let's open the dam, by the way.
yeah, the floodgates. Yes, I mean there has been a lot of talk that this is something that the U.S. administration was looking at. I think it caught a lot of Ethiopian policymakers off guard. They did not expect such an aggressive reaction out of the US. This has been, just to contextualize it, the issue around the Renaissance Dam, which Ethiopia believes they have a right to the water, which they haven't asserted. They already filled up some of that dam. There were some very heavy rains which they took advantage of. But clearly, President Trump's US administration has fallen behind and on the side of President al-Sisi. Al-Sisi is a key ally of the US. Trump often calls him his favorite dictator. But I think what's very clear here is that the US has tacked to the side of the Egyptians. Therefore, we're now in a very sensitive period for the Ethiopian policy making and Prime Minister Abiy. They're going to have, they've got an economy which is under significant pressure. The numbers that people talk about, GDP growth being around 3.5%, I would be a limit short seller on that position, frankly. You've had a lot of issues with the periphery, chafing at the bit. Tigray province in the north, the Oromos from whom Abiy hails himself. So you've got a very, very tricky, volatile, multi-sided situation that's developed. And in the current scenario, taking off $130 million, about 30 of which is near term, the balance is over the next 12 months, is not helpful for Prime Minister Abiy. So a very complex situation there, Boason, is the way I read it. And I think the clear signal that Trump administration is sending is that they're going to be backing al-Sisi in this matter. I think the Ethiopians are now going to have to do some very clever diplomacy in order to deal with the administration. They've hired some lobbyists there and also work out how they're going to thread thread this needle. The Kenyan COVID inquiry story is part of a problem across the continent where a lot of money has seemingly been purloined in this whole COVID story. President Ramaphosa described people taking money from this COVID thing as hyenas. We've had many, if you look at who supplied all this medical equipment, typically it is very well-connected political folks, whether it's in South Africa, whether it's in Kenya, Uganda, wherever you care to mention. And the problem is we're going into a recession here when money is very tight and when we're asking the international community for support, whether it's bondholders, the World Bank, the IMF, and so forth. And it's not going to be helpful if our corporate governance is found to be lacking. You'll find that people will be reluctant or demanding a much higher price when it comes to rolling over debt and so forth. So I think we need to deal with this as soon as we can. And really, it's not looking that great, in my view. Mauritius Central Bank revoking a license, look, you know, no central bank looks bad when they bare their fangs. And I think Mauritius has always had the desire to be like a financial center. So I think this speaks to that. And finally, UAP, Old Mutual, $3 million loss. This is Old Mutual who took a majority stake in UAP. And frankly, it's been a debacle since they bought it. I don't think they've booked a profit since the purchase. What has happened, a lot of these acquisition targets were very, very heavy in real estate. And real estate prices in Nairobi have been sliding since 2015. So you've got a lot of that happening. Underlying core business is good. They've got something there, but their assets have had to be marked down quite dramatically.
Thank you, Ali. We'll talk more about some of these global developments with Uche Naminis in a minute. Good morning, Uche. Welcome to the show. Uche Naminis is the managing partner at BlueFX Nigeria. Ayodeji Jebo, the CEO at Afrinvest Securities. Good morning. Thank you very much for coming on the show as well. We appreciate your time. Uche, bring us up to speed very quickly this morning. Try to add the currency conversation into this very quickly with the US dollar making a bit of a comeback. What's driving the greenback resurging?
I think right now we can just see this right now at the moment as a technical correction. I think our last discussion, I sort of highlighted that the US dollar was trading at a critical support level. So at some point, sellers are going to take their profit. They will need to cover the short at some point. And that's basically what I think we are facing at the moment. I don't think we have any significant fundamental back into that. However, we cannot take away the effect of the increase in US dollar value. We can see the euro trading lower as a result of that. Aussie dollar is also looking to trade lower, given the fact that their recent GDP report is just highlighted that they are now in a recession, and we expect a lot of those recessionary macro conditions to continue to precipitate up until the end of the year. So that in itself would maybe sort of create or highlight the difference between that US and the rest of the world growth differential. And we can see the greenback surging as a result of that. We can see the US stock market is literally in an autopilot move. No data is too bad for the US market right now. As I mentioned to you earlier too, sometime last week, is that whatever data that's been pushed out at the moment, if it's the initial job claims that we're expecting today or the non-farm payroll, every of these things will always take the back corner as it is highly speculative now. A lot of these retail investors, a lot of market participants are just focusing more now on those big 5 tech companies, the Apple, the Tesla, the Microsoft, and that is what has been carrying the majority of the stock market. And I think that's what we'll be seeing going into the rest, except something changed significantly, really.
Okay, thank you, Uche, for spicing that with some dollars and currency stories there. That's the Aussie dollar, about 30% against the US dollar uptick since March. That, I think, with the recession happening down there in Australia, I'm sure it's time for the OSI to soften a little bit. But we'll get a bit more perspectives from you on that moving forward. Let's talk about the Nigerian market very quickly. Luke will look at GTB for us, and Ayodeji will look at Stanbic IBTC very quickly. But Nigeria's trade deficit for the third 3 quarters in a row was no surprise to anyone looking at how the GDP fell sharply in the second quarter as well, 16.10% for the GDP. Total value of trade sharply down 27.3%. That's a correlation there. Exports was down 45.6%. Imports slipped 10.68%. We talk about the GTB and Stanbic Bank earnings. Ghana's treasury posted 14.06% rise year on year in 91-day yield on 91-day paper. Quickly, let's get to the earnings. I'm sure Ayodeji is angling as well as Luke. Let's go through the GT Bank numbers in just a minute. For 1 minute, I mean.
Okay. Thank you, Boasin. So looking at what these two banks released, their performance wasn't that surprising to us. Take GT, for instance. In the second quarter, we noticed that interest income declined. Was flat, actually, sorry. Interest income was flat. However, interest expense rose significantly. And that's one of the things that impacted their performance in the second quarter. We also noticed that non-interest income declined in the second quarter as well. This was mainly due to the impact of the lockdown on the company's operations. So that wasn't really completely surprising to us. Going forward, we think we might see improvements in their interest income line. We understand that it was in the second quarter that the company, not just the company, that the banks were affected the most, and that was why we saw more like flats or sometimes declines in interest income across board. But in subsequent quarters, we might see improvements along that income line. Then for non-interest income, it's been a mixed bag for some of these banks. For GT, we noticed that non-interest income declined. However, that wasn't the case for Stanbic. For Stanbic, we saw growth across virtually all line items. But what really supported Stanbic's performance in the second quarter was the growth we saw in non-interest income business. We understand that the firm actually has a strong exposure to its asset management business, and that's what supported the group's performance. So overall, we think Stanbic's performance was really good. However, when you look at their declaration for dividend, we noticed that they slashed their dividend from their interim dividend from 1 naira that was declared last year to about 40 kobo this year. So we think investors might take that to be a negative sign, and investors might react negatively to the stock in today's trading session. For GT, though not so impressive, still results. We don't really see significant declines in their PAT. PAT just declined marginally from 97 billion last year to 94 billion, despite the impacts of COVID-19. So we think the stock is still a good one for investors. Also, the firm maintained its dividend that was declared last year. Last year, the firm declared a dividend of about 30 kobo thereabouts, and still maintaining that dividend for the full for the first half of 2020. So we think that's a good one. So we might see investors cherry picking on GT. However, we still need to mention that the overall sentiment in the equity market is negative. So we might not really see strong activity in the equity market due to the release of these companies' results.
Thank you, Luke. Ayodeji, isn't 17 kobo cash dividend interim by UBA, 30 kobo from GT Bank, and Stanbic 40 kobo? Is that not enough to sway investor sentiments to keep pricing the markets upward?
Yes, I think interestingly, we believe that this will sustain that positive momentum that we've been seeing in the market. Investors have been a bit cautious, and we feel, based on at least some of the result we've seen so far, we have just two, about Zenith and I think Aptex to go. It's been positive. Even the GTB declining to 94 billion PAT, we still feel it's a very strong performance in a COVID era, and they would be able to ramp up their profitability before the end of the year to may even exceed last year, with the way they've been able to at least walk around the pandemic. So we feel that investors will now be looking at the forward valuation of most of these stocks. So for long-term investors, this is the time to look at if you even do a backward valuation and you see when the value, the profitability of some of these banks, the levels they are declaring now, if you look at it last year, comparing it to their share price, you would see that it's still, when you look at it based on a price to book value, it's still very undervalued now, and there's still potential for growth. So we're not surprised. What was common for most of them, you see impairment charges increasing by almost 200%, which we know there will be, as we progress, there will be increasing right back. And for some of them, there have been forbearances, moratorium that has been given, and we feel that as we progress, some of those things would be written back to the book. So for us, it's also very positive, and we expect that investors will react positively. Only say for Stanbic, we feel that dividend declaration is disappointing. That was very significant cut.
Well, I guess investors will just take whatever is on the table for COVID-19 period and wish tomorrow is better. Look at the Southern African market, shall we? The fraud story around COVID-19 is also there. But of course, yesterday, Eskom officials were at the parliament reporting 488 billion rand rise in the gross debt of this troubled utility for the period ended March 2020. BHP Group launches a subordinated notes repo, and the GSE has floated a no meeting Wednesday to boost staff productivity, welfare, and what have you. Ali, do you think more companies should go for a no meeting Wednesday, for example, whether it's going to be Wednesday, Monday, to allow staff to become more productive, relax a little bit, more phone calls? Folks say they're working extra hours than usual because they're at home.
So you're quite correct. I mean, all the analysis is showing from east to west, whether it's in the developed markets, emerging markets, and frontier markets, that people are complaining that they're actually putting in many more hours and are being told by the employers to be grateful for having a job. And therefore, productivity levels counterintuitively have gone up. I was speaking to a friend here in London who said twice a week he used to fly to Frankfurt. He said, I'd have 2 hours of meetings, having to leave early in the morning, airport, get there, get to the bank, come back. And he says, today I'm doing, on those 2 days, 10, 12 hours work instead. So I think this is a valid point that's being raised. It's also about behavioral economics. You know, I'm sitting around, and here in London, everyone's at home. No one is going into the office. They're avoiding it like the plague. So the question is, you know, how do we readdress that? How do we get people getting back into the office, feeling safe and secure? And I think we're in the realms of behavioral economics. And I haven't got an answer as of yet. I'm watching. But at some point, you would have thought that you've got to get leadership from the top. And that leadership's got to go back into the office and convince its employees that the environment is safe. And also, we've got to look at ways of having people communicate a more high-touch environment. And I think that's what that idea around that Wednesday was, that, you know, some of us have lost touch with that rich network of people we'd have by the water cooler, just by walking around and getting a coffee. You're not getting it with your kids and your wife necessarily. So you get
at the balcony, you know, things like that.
Yes.
Yes. Yes. So, around the coffee room, the pastry room, and what have you. What you get through such human interactions, you can get it on the telephone or via Zoom.
No,
now. The spontaneity of what you get from humans when you make contact, or just by watching others do what they do, whether they're doing it right or doing wrong, then that learning process, even for kids who are at home, is very key, because they watch their teachers, they watch other kids behave and all of that. So a whole lot is going to change with this COVID-19 lockdown, because behavioral thing that you talk about will begin to show a whole lot of things, that whether humans should rather stay away from themselves or rather mix together. Very interesting. Let me ask Uchenna, what do you think? Are you working more hours due to COVID-19, or you think we should get back to work?
Yeah, I think I agree with Ollie. That has sort of put in more hours where you need to work from home, and when I'm interacting with personnel from the office, I think sometimes we still take calls even into the midnight. You know, this is something that we would never get to do if we had that interaction at the office space. But now there is that flexibility that, or should I say, unfortunate flexibility, whereby we believe that now you're at home, really subconsciously we are now interacting and trying to do so much more, even beyond the standard work time. And that has sort of been, I don't know how that is going to translate into the economy, really. If that increase in productivity really directly in effect increase in business activity or economic activities, really, because I think it still boils down to the number. But really, if you look at data numbers from developed market and also emerging market, there is no really sort of traction in terms of hiring when it comes to job opportunities. So we're in that place whereby joblessness is significantly increasing across board. Yes, as Ali has mentioned, a lot of these employers have sort of used that as a threat to say, well, now that you're at home, you know how many people don't have the job, so you need to give in your all. So in a way, you're sort of trapped in a way, saying that, well, I need to continue to produce and work these extra hours because I rather prefer working than not having a job. So I think it's between a rock and a hard place, really. We're not exactly sure what the solution of this would be, really.
Between the rock and the hard place. Ayoade Jebo, you are CEO, as well as Ali and Uchenna. So previously, I know perhaps you find it difficult to make a phone call to a staff who is a married woman in the evening or the night once she's out of the office, except in exceptional cases. What's going on right now? What's your experience?
Yes, I quite agree with what we have said. I even for me discovered that there's no resumption time, there's no closing time. You put in a lot, and there are also more meetings that you will feel that you hold a lot of meetings now, because they know there's no logistics of trying to meet at a particular place. So you get very frequent meetings compared to what it used to be before. But in terms of productivity, especially for those in Lagos, our feedback from junior staff, it's been for them that they have to ply long hours in the morning, 2-3 hours, 2-3 hours in the evening. They are very excited about this, and they are willing to put in more hours, so they could wake up at 7 a.m. or 8 and start their work, and they are more relaxed compared to when they're already tired before they get to work. So with things are evolving, even for us as a firm, even beyond COVID, there's already a policy now that you have the option of you can come in twice in a week, and you work 3 days from home. So it's just changing the way businesses are done, and you also looking at reduction in some of the costs, and for even client meetings that you just have to go. So things are already evolving that people will prefer you have a virtual meeting, which is even easier for both parties now. And thanks even to the CAMA, the new CAMA law that even has also, once it becomes effective for virtual meetings, AGMs, you don't have to spend to take a hall. You can take a small hall and you have others join online. And
Wow.
so I think it's already changing the way we think, where we
Ayo, that would be
business
good.
today. Yeah.
No, that would be good. But again, you know how the impact that will have on event centers and hotels, big hotels, for example, in Lagos and Abuja, that depends, like Transcorp, that depends on huge meetings, annual general meetings, all the paraphernalia and what have you, the food, the drinks, the gifts, and whatever. That industry would definitely feel a whole lot of
Yeah,
impact
yes,
moving.
totally agree. And sorry, I forgot the one downside is the company culture. So we are still trying to figure out how do we, for new takes those that are just joining the team, how do you incorporate and you don't lose that your corporate culture that you built over the
That's one
years.
point about hiring. DJ, I was going to ask Luke very quickly for just about 1 minute. Luke, what do you think about? Do you think companies will be hiring more under this lockdown, work more from home than office and all of that? Do you think those who are qualified for jobs will be able to get a job a bit more easily?
So it's a mixed bag across board, really. So for some companies, I think what this lockdown means, as in working from home, working remotely, what it means is that it comes with flexibility, really. So it comes with better management of time. You know, when you have the bulk of your work, you know the time when you have the bulk of your work, you know when you need to provide more time to your work, you know when you need to take break, and you know when to close for the day. So that flexibility is there for companies that are more concerned about the welfare of their staff. Then in some other places, it's more like, oh, so since you don't go to the office, you actually have all the time in the world. You have no excuse to complain about traffic. So when you are called for meetings, you can say traffic will be the reason why you won't show up early at the meetings. Um, More so, they believe that the time you spend on traffic and all that is no longer there. So you have that time now to commit to work. And for a number of people, it might also be due to the nature of their businesses. So maybe for investment banks, I'm talking about core investment banking, where you have to work on multiple deals at the same time. They believe that there is that time now working from home. So for a number of them, early resumption, late closure is more like the norm for a number of these investment banks. But really looking at it, is that really the right thing? Of course, it's not. So I think is the people who are in charge of coming up with corporate strategy, looking at what's considering the welfare of their members of staff, work-life balance. So it's up to them to really come up with measures that can help to resolve these workload challenges that a number of people have been complaining about. Here in Nigeria,
Okay.
is the situation is somewhat funny, given that the labor force, we don't really have that strong union that can actually help to fight for the labor force in terms of too much workload during this period. So I think it's also something that the government can look into and help to resolve this.
You know, gentlemen, there's something I keep thinking about over the last 24 hours about this work from home, Ali. Uh, you know, if you stay more at home, perhaps your wife also work like that, you're going to be spending more on energy, electricity, for example. So for example, if you had to go out in the morning and go to work, it's the offices that will pay the energy bill because the lights on, the air condition, the coffee, the water, the toilet, and what have you. But now that you're working from home, who pays for increased energy that you're using, for example? If you're in Nigeria, for example, that means your generator or your solar energy is running more for those hours and hours or days of outages. So who compensates you for increased energy consumption you're having at home? Would that be the office, or is out of your regular salary, or would there be some provisions, as it were?
Well,
I just don't know how to get it because
your question is more valid in the emerging and frontier markets where we are paying through no for our energy, and it's particularly if you're paying through a generator, you're quite correct. and you've got to be always on because people are going to say you're just at home. Why didn't you pick up that call? And you can't go around saying my power was out and I don't have backup. So your point is extremely valid, but I think there's an advantage and a disadvantage. You're saving money on commuting. You're saving stress in most of our cities. I'm afraid it's very
I agree with you.
driving around, really. So a little bit of
I agree with you.
yeah.
Yes, I know. So corporate offices are the ones that will be gaining because I'm sure there will be more lights out in offices, air conditions are down, gas usage in offices are also reduced. But again, it's a whole new world. We have a whole lot of time ahead of us to figure it out, whether we want to stay, work from home more, or work less from home, whichever will just get our life back. Finally, on the show this morning, gentlemen, sorry for taking more of your time. In North Africa, let's just quickly have a quick rundown of that, and then we'll say goodbye for this Thursday. The Egypt banking sector, according to the IMF, looks very liquid and very strong in terms of profitability. The IMF says Egypt is expected to grow 6.4% on the economic front for 2021-2022. That's a strong one there. And Tunisia's parliament has okayed a technocrat government to take charge of socio-economic problems while the political parties resolve their differences. Let's leave it there for today, gentlemen. It's very early. We appreciate your time. Ali Kansachu, thank you so much for coming through from Rich Frontiers. Luke Ofojebe, thank you. From Veteva Capital Management, Ayode Chebo, the CEO at Afrinvest Securities, and of course, Uchenna Minis as well from BlueFX Nigeria. Thank you, gentlemen. Have a great day. Tomorrow is Friday. Let's have a TGIF here on Frontier Africa Reports.